I think we're there. So on behalf of Bucks County SCORE, I want to welcome all of you to our webinar program. As you know, I'm just going to give you a 1-minute commercial about SCORE and then move right into our program. SCORE is a national organization with about 350 chapters. We're funded in part by the Small Business Administration. We have nationwide, there's about 10,000 mentors, and we have about 75 members in Bucks County. Our mission is to help small businesses start, grow, or thrive. And as such, you can if you went to our website, which is buckscounty.score.org, and if you need help in any of those situations or you'd like to volunteer to be a mentor, going to our site and then click the appropriate icon, and we will be happy to help you. As I said, we will be recording the session, and so you don't need to take notes. You can just pay attention and you'll get a copy of everything. At the end, we ask you to please use the Q&A icon while you have questions in mind. Click them in there. Try not to put them in the chat, but put them in the Q&A. And at the end, I will feed the questions to the Internal Revenue Service folks. I just want to mention that this is one of 35 webinars that we're presenting this year, which is September to September. And next year we have 40 webinars planned. As you know, they're all approximately Tuesdays and they're approximately 11:30, and we don't charge. So with that, I'm going to move to our presentation. Our presentation today is what you need to know as a small business. It's being presented by the Internal Revenue Service, and we have several folks from the service with us. Our principal speaker is Leslie Chambers, and Leslie is a senior stakeholder liaison with the Internal Revenue Service. She represents the IRS educational and taxpayer outreach events. She's been with the IRS since 1988 in many, many different capacities, and the last one being 12 years as a practitioner priority service supervisor. She has a bachelor's degree from Temple with a major in accounting and an MBA from Rosemont College. Just so you know, we will also have during the Q&A session 2 other colleagues of hers joining to help answer questions. So with that, I'm going to move forward and turn it over to Leslie. Leslie?
Good morning. My name's Leslie Chambers. I'm a stakeholder liaison working for the Internal Revenue Service out of the Philadelphia office. Stakeholder liaison establishes and manages relationships with tax professional and partners that serve small businesses, multilingual, rural, and underrepresented communities to promote a two-way dialogue in helping America's taxpayers understand and meet their tax responsibilities. This presentation will identify many resources I have to share. I want to help you find answers and to know where to look if you have any questions. There are several points I'd like to discuss. The first is estimated tax payments and avoiding estimated tax penalties, worker classifications, then record keeping, choosing a tax preparer and avoiding ghost preparers, small business tax workshops, small business resources, and economic impact payments and recovery rebate credit. First, a significant issue I'd like to talk about is estimated tax payments and ways to avoid the estimated tax penalty. Some income is not subject to withholding. This includes income from self-employment, whether you're a self-employed plumber or an Uber or Lyft driver. No one is taking out taxes. So you have to make those payments yourself. Be sure to make estimated tax payments on those sources of income throughout the year. Your estimated payments are based on your income that you expect to earn and any credits you expect to receive during the year. You can use your prior year return as a guide and Form 1040 ES, estimated tax for individuals. It has a worksheet on it to help you figure your estimated tax payments. And you can use the estimated tax payments to pay both your income tax and your self-employment tax, which is the Social Security and Medicare. Estimated tax payments are due in 4 installments. January 1st to March 31st income, the payment is due April 15th. On June 15th, income from April 1st to May 31st, the tax on that is due June 15th. From June 1st to August 31st, the payment is due September 15th. And September 1st to December 31st, the payment is due January 15th of the next year. And you can send the estimated payments with Form 1040 ES. Better yet, you can pay online if you want, or by phone or on your mobile device using the IRS To Go app. And I'll talk about that again later on. You can use Direct Pay app for your bank account transactions and making safe and secure payments using your credit card. So the IRS has seen an increasing number of taxpayers subject to the estimated tax penalties, which apply when someone underpays their taxes. And we've seen an increase of nearly 40%. The penalty amount varies, but can be several $100s. So the IRS is urging taxpayers to check into their options to avoid these penalties. Adjusting withholding on your paychecks or the amount of their estimated tax payments can help prevent penalties. And this is especially important for self-employed people, people in the sharing economy, those with more than one job, and those with major changes in their life, like a recent marriage or a new child. They definitely need to work on their estimated payments. The IRS has a new pay as you go so you don't owe page. This is going to help you make sure that you have enough tax payments during the year. Since taxes are pay as you go, this means you need to pay most of the taxes during the year as you receive the income, rather than paying at the end of the year when you file. Having enough tax withheld or making quarterly estimated tax payments during the year can help you avoid a large tax bill and penalties at tax time. So what happens if you underpay? You have to pay a penalty. This applies whether you pay through withholding or through estimated payments. A penalty may also apply for late estimated payments, even if you're due a refund when you file your tax return. So in general, you don't have to pay a penalty if you meet any of these conditions. If you owe less than $1,000 in tax on your tax return, throughout the year, you paid the smaller of these two amounts, at least 90% of the tax from your current year, or 100% of the tax shown on your prior year return. And this can increase to 110% based on your adjusted gross income, AGI. For example, in 2020, if you paid 90% of the 2020 liability or an amount equal to your 2019 liability, then you will not be penalized. To see if you owe a penalty, taxpayers should file Form 2210 and attach it to their Form 1040 when they file. The IRS may also waive the penalty if someone underpaid because of unusual circumstances, like a casualty, a disaster, or something like that, out of their control. As I've been saying, taxes are pay as you go, so you need to pay most of your tax during the year as you receive the income, rather than paying at the end of the year. There are many resources on irs.gov with information on estimated taxes including what you see here on the slide. Now let's consider worker classification. There are two worker classifications: employees and independent contractors. An employee is an individual who performs services for a firm and who is subject to their control regarding what will be done and how it will be done. If the employer retains the right to direct and control the means and details of the work, then the worker is an employee. However, in contrast, an independent contractor is an individual who performs services for a firm, but controls only the result of the firm. The firm only controls the results, not the way that the work is done, the methods of accomplishing the result. It's critical that business owners correctly determine whether the individuals providing the services are employees or independent contractors. Generally, you must withhold income taxes and pay Social Security and Medicare taxes and pay unemployment tax on wages paid to an employee. You do not generally have to withhold and pay taxes on any payments to an independent contractor. So generally, there are three main categories of evidence that show whether a worker is an employee or an independent contractor. The first one is behavioral. Does the company controller have the right to control what the worker does or how the worker does his or her job? The second is financial. Are the business aspects of the worker's job controlled by the payer? These include things like how the work is paid, whether expenses are reimbursed, who provides the tools and supplies. The third is the type of relationship. Are there written contracts or employee type benefits like a pension plan, insurance, vacation pay, etc.? Also, will the relationship continue, and is the work performed a key aspect of the business? Businesses must weigh all of these factors when determining whether a worker is an employee or an independent contractor. Some factors may indicate that the worker is an employee, while others may indicate that the worker is an independent contractor. There's no magic set number of factors that makes a worker an employee or an independent contractor, and no one factor stands alone in making this determination. Also, factors which are relevant in one situation may not be relevant in another. The keys are to look at the entire relationship, consider the degree or the extent or the right to direct and control, and finally, to document each of the factors used in coming up with a determination. If after reviewing the three categories of evidence, it's still unclear whether a worker is an employee or an independent contractor, Form SS8, Determination of Worker Status for purposes of federal employment taxes and income tax withholding, can be filed with the IRS. The form may be filed by either the business or the worker. The IRS will review the facts and circumstances and officially determine the worker status. But be aware that it can take at least 6 months to get a determination. But a business that continually hires the same type of workers to perform particular services may want to consider filing the Form SS8. If the person is classified as an employee, you must have an employer identification number, an EIN. Your tax responsibilities include withholding, depositing, reporting, and paying employment taxes. You also must give certain forms to your employees. They must give you certain forms also, and you must send certain forms to the IRS and the Social Security Administration. So the point I'm making is, if you classify an employee as an independent contractor and you have no reasonable basis for doing so, you may be held liable for employment taxes for that worker. So please look on irs.gov publication 15. It's the Employer's Tax Guide for further information on making this determination. Now turning to record keeping. Good records will help you monitor the progress of your business. Prepare your financial statements, identify sources of income, keep track of deductible expenses, prepare your tax returns, and support items reported on your tax returns. So purchases, sales, payroll, and other transactions you have in your business will generate supporting documents like invoices and receipts. Supporting documents also include sales slips, paid bills, invoices, receipts, canceled checks. These documents contain the information you need to record in your books. It's important to keep these documents because they support the entries in your books and on your tax return. You should keep them in an orderly fashion and in a safe place. For instance, organize them by year and type of income or type of expense. The IRS has a more detailed information in publication 583, Starting a Business and Record Keeping. All requirements that apply to hard copy books and records also apply to business records, which are maintained using electronic accounting software or point of sale software, financial software, or any other electronic record system. The electronic system must provide a complete and accurate record of your data. Whether you keep paper or electronic journals and ledgers, and how you keep them depends on the type of business you're in. The system you use to record business transactions will be more effective if you follow good record keeping practices. And businesses that keep records electronically on a computer should always have an electronic backup in case the hard drive crashes. The system you use to record business transactions will be more effective if you record expenses when they occur and identify the source of the recorded receipts. Generally, it's best to record the transactions on a daily basis. One of the first things you should do when you start a business is open a business checking account. You should keep your business account separate from your personal checking account. The business checkbook is your basic source of information for recording your business expenses. You should deposit all daily receipts in your business checking account. You should check your account for errors by balancing your checkbook. You should make all payments by check to document business expenses. Write checks payable to yourself only when making withdrawals from your business for personal use. Avoid writing checks payable to cash. If you must write a check for cash to pay a business expense, include the receipt for the cash payment in your records. If you can't get a receipt for a cash payment, you should make an adequate explanation in your records at the time of the payment. Use the business account for business purposes only and indicate the source of the deposits and the type of expense in the checkbook. Gross receipts are the income you receive from your business. You should keep these supporting documents that show the amounts and sources of your gross receipts. Cash register tapes, bank deposit slips, receipt books, invoices, credit card slips, Form 1099 MISC that you may receive. Keep all the records for employment taxes for at least 4 years. Any expenses you have, make sure that you're keeping these records. Keep your canceled checks, cash register receipts, account statements, credit cards, sales slips, invoices, everything together. Petty cash slips for small cash payments, everything together. Keep all records of employment taxes at least 4 years after the filing of the fourth quarter. Records should include your employer identification number, amounts and dates of wages and annuities, any pension payments, tips that are reported, names and addresses and social security numbers and occupations of all your employees and recipients should all be kept for 4 years. Any employee copies of Form W-2 that you received back as undeliverable, you should keep. Keep a record of the dates that people were employed. Keep a copy of all your returns that you filed and any allocated tips, fringe benefits, all of that. And for additional information about employer or employment taxes, the IRS has publication 15, Circular E, the Employer's Guide, or publication 225 if for farmers. There's their farmer's tax guide. For employment tax record keeping, you can look on www.irs.gov. In other words, good records will help you prepare your tax returns and support items on your tax return. The next thing I want to talk about is choosing a tax return preparer and avoiding ghost preparers. Let's start with some basic tips. In the process of choosing a qualified tax preparer, obviously, as you would do when deciding on any professional, such as an attorney, doctor, or dentist, you want to check on the preparer's qualifications and their history. So for example, you'd ask, what type of tax returns does the preparer complete each year? How long have they been preparing tax returns? Can they give you references? Does the preparer have a website or even social media that you can check out? You always want to ask your prospective preparer about his or her service fees. You should always avoid preparers who base their fees on a percentage of the refund, or perhaps they brag that they've obtained larger refunds than their competition. When inquiring about a preparer's services and fees, don't provide the tax preparer with any tax documents upfront, like your social security number, other information. Don't give them any of this before you're comfortable that this is going to be the right preparer to provide you with competent, ethical service and preparation of your tax return. Unfortunately, we at the IRS have seen some unscrupulous preparers who take information and documents that have been provided to them and then improperly use them and file tax returns without the taxpayer's permission. Avoid these preparers, no matter what they promise you. Ask your tax return preparer if they're going to electronically file. The IRS has been processing electronically filed returns for many years safely. You may also want to make sure the preparer is available if you have any follow-up questions after your return is filed. Taxpayers occasionally need to contact the preparer after the due date of the return. So you'd want to avoid these fly-by-night preparers who simply disappear after they prepare your return and take your payment. Good preparers will ask to see all of your records and receipts in order to prepare your tax return. Then they're going to ask questions to figure the total income, eligible deductions that you might take, tax credits, etc. Never sign a blank return. This is a violation of the rules of federal tax preparers. Never use a tax preparer who asks you to sign a blank tax form. And you want to review your return completely before signing it. Ask questions if something's not clear. You should feel comfortable with the accuracy of your return before you sign it. You should also make sure that the refund goes directly to you if you're claiming a refund. So you don't want to have the refund go to the preparer's bank account. So definitely review the routing number and the bank account number on the completed return before it is filed. Make sure it's your bank account that the refund's going into. You always want to avoid what we refer to as ghost preparers. A ghost preparer is someone who you pay to prepare your tax return and then does not sign your return. By law, preparers must sign their return and include their P-10 on all tax returns for compensation and have filed with the Internal Revenue Service. Also, taxpayers want to keep copies of their tax returns prepared by their paid preparer. So you might want a copy of the return, for example, in the future, if you decide to use the services of a new preparer. You also might want a copy of the return for other reasons, such as a student financial aid package you want to fill out, or perhaps to obtain a mortgage or a loan. So tax professionals have differing skills and education and expertise. Some preparers who are not enrolled agents or CPAs or attorneys have limited practice rights. The IRS has a program that we've had for several years called the Annual Filing Season Program. This is a voluntary program, and it recognizes the efforts of many tax return preparers who are generally not attorneys, not CPAs, not enrolled agents. The IRS designed the Annual Filing Season Program to encourage those non-credentialed preparers to continue their tax education each year and prepare for filing season before tax season gets underway. So the IRS will issue an annual filing season program record of completion to return preparers who obtain a certain number of continuing education hours in preparation for the specific tax year. There are also P-10 holders. These are tax return preparers who just have an active preparer tax identification number, or P-10, but they don't have any professional credentials and do not participate in the annual filing season program, but they are authorized to prepare and file returns. This is a webpage on irs.gov, and it has our directory of federal tax return preparers with credentials and select qualifications. It's a searchable directory, and it's intended to help taxpayers choose a tax return preparer by providing a listing of preparers in their area who currently hold the professional credentials that I talked about, that are recognized by the Internal Revenue Service, or who hold that annual filing season program record of completion. Not only do they have this directory, but you could check the directories that professional organizations offer that many tax preparers belong to. The IRS does not endorse any specific preparer or credential over another. And a listing in this directory does not represent an IRS endorsement for specific tax preparers. So as a reminder, never sign a blank return. Don't use a tax preparer who asked you to sign a blank return. Make sure you review your return before you sign it. You should feel good about it before you sign it. You should also make sure the refund goes directly to you, not to the preparer's bank account. And finally, every taxpayer is legally responsible for all the information entered on their tax return. So make sure you're checking everything completely. Ghost return preparers get their scary name because they don't sign the return they prepare. So like a ghost, they try to be invisible to the fact that they prepared a tax return. They may print out their client's tax return, have the client sign the tax return, and then mail it to the IRS. Or for electronically filed returns, the ghost preparer will prepare the return but refuse to digitally sign the return as the paid preparer. As I mentioned earlier, anyone who is paid to prepare or assist in the preparation of any federal tax return must have a valid PTIN or preparer tax identification number. And again, those preparers must sign and include their PTIN on the return filed with the IRS. So not signing a tax return that the preparer will then provide to you is a red flag that the paid preparer may be looking to make a fast buck off of you, potentially by promising a big refund or charging fees based on the size of the refund. Ghost preparers may file the tax return without getting your signature at all, without your knowledge or consent. And worst of all, they may misdirect your refund into their bank account, not your bank account, and then disappear like a ghost. So you never want to be victimized in any way by these ghost preparers. Ghost return preparers get their scary name because they didn't prepare it. So make sure that you have everything, all your ducks in a row. They may print out the client's tax return. They may do a whole lot of things that is not going to be legal or non-fraudulent, I guess. As I mentioned earlier, anyone who's paid to prepare it must have that information on their return. While the IRS knows that most tax return preparers are honest and trustworthy professionals, there's some professionals who will commit fraud or other types of things when you give them your information. So the IRS is committed to investigating these preparers who act improperly. Taxpayers can report abusive tax preparers and suspected tax fraud to the Internal Revenue Service by using a form 14157, complaint of a tax return preparer. If the taxpayer suspects that the tax preparer filed or changed their return without the taxpayer's consent, or is possibly an abusive tax return preparer or an abusive tax preparation company, they should file form 14157A, which is the tax return preparer fraud or misconduct affidavit. You can get these forms, of course, on irs.gov anytime. You can complete the form online and simply print it out and mail it to the IRS using the instructions that are on the form. The address is there. This is the tool that a lot of people use. It's on irs.gov and it tells you how to choose a tax professional. So if you're ever in need of some information, the IRS has a webpage dedicated to information on how to choose a tax professional. As you can see here, it includes what kind of tax preparer do I need? How can I check a tax preparer's credentials? What if I have a complaint about a tax preparer? The webpage also includes a useful YouTube IRS video, how to use the tax return preparer directory. So if you want to go on irs.gov, you can use these key search words. Choose a paid tax preparer, ghost preparer, directory of federal tax return preparers, third-party authorizations, report suspected tax fraud, And of course, the forms 14157 and 14157A. Taxpayers are responsible for the accuracy of all entries on their tax returns, which includes related schedules, forms, and supporting documentation. This is true whether the return is prepared by the taxpayer or by a return preparer. So just be careful in selecting the tax professional who will prepare your return. Next, I want to talk about our small business tax virtual workshop. The online small business tax virtual workshop it's made up of 9 lessons. You can pick and choose which one you want to view, whether you're just getting started or you're an existing business and you want to hire employees or an independent contractor. There's a lesson for you. There's also great information on operating a business out of your home, small business retirement plans, lots of things. So check it out. This is also a great option for those who can't attend an in-person workshop due to their schedule, because this is available online 24 hours a day, 7 days a week to fit your schedule. This product includes lessons on federal taxes in your new business, Schedule C and other small business taxes and tax forms, retirement plans for yourself and your employees, federal taxes when hiring employees or contractors, managing a payroll and withholding the correct amount from employees. Certain topics have a place where when you select the circumstances that apply to you and listen to that section, you only have to get the ones that apply just to your situation. For example, in lesson 2, you can learn about gross receipts and cost of goods sold, or you can skip that part if you don't see products that are relevant to your business. The content is updated when there are tax law changes, and we replace videos or can add slides to direct you to new information. And if you've ever been there before, we have a new URL. This is the new URL for the Small Business Tax Workshop. And some new features are transcripts are available for the entire presentation. So you can read along if you like during the presentations. And you can customize, like I said, and only view lessons that you need. You can share a link, bookmarks, you can have references. The point I'm making is the Small Business Tax Workshop has a lot of useful lessons. And now let's look at some important resources to help you with your business. This is irs.gov. It's the official IRS website. It offers quick access to information and helpful tax tools. Taxpayers may find that irs.gov is the best place to go for answers to many tax questions. Many pages on irs.gov are now available in 7 other languages: Spanish, Vietnamese, Russian, Korean, Haitian Creole, and Chinese, simplified and traditional Chinese. Here are some additional materials and services that are now available in multiple languages. Publication 1, Your Rights as a Taxpayer and Other Basic Tax Information are now available in 20 languages on irs.gov. Taxpayers who interact with an IRS representative have access to over-the-phone interpreter services in more than 350 languages. IRS.gov also has the Earned Income Tax Assistant tool that's newly available in Spanish. The IRS continues to incorporate multilingual information into their Twitter, Instagram. They have key highlights in Spanish, Vietnamese, Russian, Korean, Haitian, and Chinese. In tax year 2019, The 1040 SR was introduced, and that has larger print for people that may have some to need to see print that's larger for maybe older Americans. This is the Small Business Self-Employed Tax Center on IRS.gov. You don't have to be a tax expert when you're running a business, but you need to know the basics so your business can run smoothly. The IRS.gov Small Business Self-Employed Tax Center has useful tax information and services for business owners. The tax center can help taxpayers whether they are starting, operating, or closing a business. Here you can apply for an employer identification number, which is one of the first things new business owners usually think about when it comes to taxes. If you want employment tax information, this is where you'll find it. The Small Business Self-Employed Tax Center also offers other tools and resources. For example, there's a link to the video portal and other online tools, which I'll talk about a little later. The Tax Center houses links to small business events and educational products. There's things like, is it a business or a hobby? Selecting a business structure, getting an employer identification number, business taxes, record keeping, when do I start my tax year? There's a checklist for starting a business, types of retirement plans, small business publications. An employer identification number, an EIN, or federal tax identification number, sometimes it's known as, is used to identify a business entity. Generally, businesses need an EIN. You may apply for an EIN in various ways, and now you can apply online. It's a free service offered by the Internal Revenue Service, and you can get your EIN immediately. There are links on the Small Business Self-Employed Tax Center asking you, do you need an EIN? Do you need a new EIN? How to apply for an EIN? How long will it take to get a number? Which, like I said, if you would like, you can get it immediately. As you can see, there's a wealth of information on the Small Business Self-Employed Tax Center. Now we're going to highlight a few other resources. The IRS has a tax calendar. It offers several free resources to assist small business owners. So to avoid not filing on time or not making your federal tax deposits timely, by taking advantage of, you can take advantage of this free online IRS tax calendar. The IRS tax calendar allows you to view important tax dates for small businesses on your computer or mobile device, including your smartphone. The calendar can display general information on various due dates based on your specific business needs. You can decide what filters are displayed on the calendar. For example, if you're a monthly or semi-weekly depositor, you can choose that particular filter. So any filing requirements or deposit due dates will show up in the calendar relative to that specific filter. And the calendar is available in both English and Spanish. And by the way, another great feature is that you can receive email reminders from the calendar in advance of the due date. You choose the category for the reminders you want to receive and how far in advance you want to get them, either 1 or 2 weeks. Follow the instructions on irs.gov, search tax calendar to download or subscribe to this calendar. This is really a good tool for beginning businesses. So the tax calendar is just the beginning. There's other tools available for small business owners. The IRS Video Portal. Now, I know as business owners, you're busy running your businesses, so you may not be able to join the live webinars. Through this video portal, you can watch helpful videos and archive webinars on a variety of topics, from filing and paying your taxes to understanding the IRS audit process. Yes, we also offer live webinars. which is another form of electronic communication that we use to deliver important tax information. Webinars are a convenient way for people to see and hear a presentation online using their own computers. Those who want to register for a webinar should just type in webinars in the search box on irs.gov to reach the registration page. For those who miss a show, they can view the show on the IRS Video Portal on irs.gov. Shows are generally added to the portal within about 3 weeks of the broadcast. The portal currently houses more than 150 IRS videos, webinars, and workshops. So the IRS has been communicating through social media for more than 10 years. If you don't already use these and want to start connecting with us, you can find links to all of our social media accounts by entering IRS social media into the search box on irs.gov. You'll see the many options that are available. During the COVID-19 period, we had added some special accounts to focus on outreach regarding coronavirus tax relief. If you're interested in seeing more IRS YouTube videos, click on the IRS videos link on the right-hand side and start viewing our short, informative videos on certain topics. These videos are listed in groups such as small business or tax tips or tax pros, so you can narrow down the list of what you're interested in. Many of these videos are posted in Spanish or American Sign Language too. You can also find videos concerning different topics from the National Taxpayer Advocate. So we looked at what the IRS has to offer through social media and how you can share pertinent information in various ways with your clients. The IRS webpage, the irs.gov webpage, highlights the various newsletters you can subscribe to, whether you want to receive the latest news releases or tax law updates, or to get information specifically for your small business. We have e-subscription web pages in Spanish too. There are a wide variety of options to stay informed, and you can view and subscribe from irs.gov. All you have to do is use the keyword search e-news. Then on the e-news subscription page, you can choose to view in English or Spanish. The IRS has many electronic news subscriptions delivering news directly to your email box. As a small business owner, e-news for small business would be a great tool. E-news for small business is designed to provide small business owners and self-employed individuals all kinds of tax information. Sign up and you'll get reminders, tips, everything to make sure that you can stay tax compliant. IRS news releases will also be available, special IRS announcements that pertain to small business customers. You'll also get tax-related information from other federal agencies. When you subscribe, you will receive a confirmation message by email. Remember, you must respond to this email in order to verify your subscription. These e-subscriptions are one of the best ways you can stay plugged in to the IRS and get updates and news that you can use. Besides our standard e-news, we have Outreach Connection. The Outreach Connection is both a designated page on irs.gov as well as a monthly e-subscription. And like I said, this is monthly, so you only get it once a month. It provides new tax law legislation, IRS events, activities, anything that will affect your businesses. You may even want to share some of the information with your clients, employees, customers, your partners, your families. there's all kind of information. It has the latest social media information, including Twitter, Instagram, and YouTube. There's informational flyers. There's information about what upcoming webinars and events. And they also have ready to use information that you can just put right into your newsletter so that you can post it on your website or put information directly into your social media from the IRS with news and tips for people to view. The IRS To Go mobile app has several tools you and your customers, friends, and family may find useful. This app allows you to check your refund, make a payment, sign up to receive tax tips by email, follow the IRS on social media, find tax preparation assistance, and use IRS Free File. You can access free tax software from your mobile device using IRS Free File, prepare and file your taxes online, and get your refund using participating free file software providers. You can also find an IRS Volunteer Income Tax Assistance, or VITA, or they also have tax counseling for the elderly sites near you, and through this you can receive free tax help. These programs are available to taxpayers who qualify. On IRS To Go, you can also check the status of your refund. It's the easiest way to check the status of your federal tax refund on your mobile device. You receive a personalized refund date as soon as the IRS processes your tax return and approves it. Where's My Refund updates no more than once every 24 hours, usually overnight, so you only need to check it once a day. You can use IRS To Go to pay your taxes. You can pay your taxes with direct pay or by debit or credit card. IRS To Go provides easy access to mobile-friendly payment options, offering you a free and secure way to pay directly from your checking account or your savings account. You can also pay with credit card or debit card through a payment processor for a fee. For other payment options, you can just go to irs.gov/payments. If you'd like to download IRS To Go, you can download it for free from Google Play, the Apple App Store, or the Amazon App Store. As I've been saying, no matter when you need tax help or information, your best option is to visit irs.gov. Our website has many tools and services which make getting help from the IRS just a click away. Changing topics. I want to address economic impact or stimulus payments and the recovery rebate credit, which are interrelated. This can be a bit confusing, so stay with me. The U.S. Treasury issued 2 economic impact payments for stimulus. The first stimulus payments were issued starting in April of 2020 and the second in January of 2021. You might have heard these payments referred to as stimulus payments. These payments were an advanced tax rebate on your 2020 taxes. The recovery rebate credit is the credit you claim on your tax return if you didn't receive the stimulus payments you qualified for or didn't receive the full stimulus payments you qualified for. So if you receive the full amount of each economic impact or stimulus payment, you won't claim the recovery rebate credit on your 2020 tax return or include any information about the economic impact payment on your 2020 tax return. However, if you're eligible and either you didn't receive any economic impact or stimulus payments, or you received less than the full amount that you qualified for, you can claim the recovery rebate credit. To claim the recovery rebate credit, you must file a 2020 tax return. This is true even if you are not required to file a tax return for 2020. So if you don't file a 2020 tax return, you will not receive the recovery rebate credit, even if you're entitled to it. This is important because the IRS estimates that about 8 million individuals did not get the economic impact or stimulus payments they were entitled to. Economic impact payments were based on your 2018 or 2019 tax year. The recovery rebate credit differs in that your eligibility and the amount of the credit are based on information that you include on your 2020 tax return. You will need to know the amount of any first or second economic impact or stimulus payments you received to claim the recovery rebate credit. If you're eligible for the recovery rebate credit on your 2020 tax return, it will be reduced by any economic or stimulus payments that you already received. It's important to note that the recovery rebate credit is a refundable credit, which means you'll get a tax refund if the recovery rebate credit is larger than any tax you would otherwise have to pay. So for example, if you don't owe any tax and you qualify for the recovery rebate credit, the recovery rebate credit would be refunded to you. The IRS postponed to May 17, 2021, the date to file 2020 forms 1040 and 1040 SR and to pay any related tax. The due dates for estimated tax payments for 2021 were not postponed. The first 2021 estimated tax installments are due April 15th of 2021. If you have made timely estimated tax payments for the 2020 tax year, a credit election moving your refund to 2021 will be applied as of April 15th and will be considered as a timely estimated tax payment for 2021. So in summary, pay as you go so you won't owe. Keep your record, keep really good records when you're keeping your books. Avoid ghost preparers. Use irs.gov, navigate it. It's really a wealth of information. You can engage there in many languages. You have access to the latest IRS news, tax tips, and resources. Stay in the know with IRS e-subscriptions. Follow the IRS on social media and share IRS messages with your followers. And finally, economic impact payments and the recovery rebate credit. Make sure that when you file your 2020 tax return, that you claim the recovery rebate credit if you did not get both economic impact payments or stimulus payments. Thank you.
Great. Well, thank you so much, Leslie. That was a lot of great information, and I'm glad we were able to record it so that folks can sit back down and reread all of that, because there's a lot to digest. We also have quite a few questions. So one question was, are there any handouts? And the answer is yes. That is, you'll get that after we process the presentation, and it comes today. The next question is there an option to pay estimated tax every month? That would be really helpful for a small business owner operator. I guess you can pay as much as you want. What would you do? What would you answer that, Leslie? Did you hear me?
Yes, I heard you.
Oh, okay.
Trying to get my screen to go down. Hold on for a second. Wait.
That's okay. It can stay there.
Anyway, I've never heard of anyone paying with a monthly payment. I don't know. What do you think, Odette?
You can use our EFTPS system, which is our electronic federal tax payment system. So that's a system that you can enroll in, and you can make any federal tax deposits at any time that you want. So if that's more convenient for you, rather than filing quarterly estimated tax payments, you can certainly do that. We're certainly willing to accept money anytime you send it to us. And EFTPS, that electronic federal tax payment system, is the easiest way to do that. You can just enroll in that, and then you can designate the payments that you want to make. You can set them up in advance. You can reschedule them if you need to. You can get a payment history. So EFTPS is a great system if you'd like to stay on top of the deposits that you make. And that's really a great idea, especially if you have a good handle on your business, and let's say you're not really sure how it's going to go for one quarter to the next, and then you find that maybe the business is doing better, you'd like to make more deposits, you can certainly do that. And EFTPS is not just for businesses, you can do that for individuals as well.
Oh, great. Okay, here's a question. I think you answered this, but how long should one keep their documents? The person's thought, is it still 7 years? I thought you said 5, but what would be the answer?
Well, I was speaking of employment
Oh, okay.
records. That's 4 years.
Ah.
Are they talking about personal taxes?
Well, it just said how long should documents be kept? And they said 7 years still, because I think the old rule used to be you had to keep everything for 7 years in case you were audited. I would imagine it's personal, and business, small business is kind of the same.
Right. I don't know that
this is Maggie. I can answer that question.
Oh, go ahead, Maggie. Hi.
Hi, Mr. Torello. Thank you
hi.
for asking. So it's a complicated question. So basically, the IRS has 3 years to audit a taxpayer, and it's 3 years from the due date of the tax return, which is normally April 15th of the following year. But if the taxpayer requests an extension, then we have 3 years from that extension date. So if you request an extension to October 15th, then we have 3 years from that date. So as a general rule, you need to keep your tax paperwork, a copy of the return, and all the backup for 3 years. That's the general rule. However, there are a couple exceptions. So for instance, if you are a business owner and you purchased a piece of equipment that you are depreciating over multiple years that go beyond that 3 years, then you're going to want to keep the information pertaining to that depreciable asset, especially if you plan to sell it at some point. Because when you sell it or dispose of an asset in any way, there is a related tax event that takes place with that asset. And so you need to know how much you paid for it and how much you've depreciated it over time. The same holds true if you invest in the stock market or mutual funds. If you buy stocks in the year 2020 and you hang on to those stocks for 15 years, you're going to need that 15-year-old information to know how much you paid for those stocks when you decide to sell them. So again, as a general rule, we say 3 years, but there are exceptions to that. And then the other piece that I just wanted to mention, and I don't think it's applicable here, is we have 3 years to do a civil audit, but if for some reason the IRS was interested in pursuing an audit in a criminal case, and criminal cases are fairly rare, then we have more than that 3 years. But again, for purposes of this discussion, the general rule is 3 years. So I hope that answered your question.
Right.
And Maggie, this is Odette. If I could just add to that as well.
Sure.
So when we talk about the 3-year statute, just remember that that's, as Maggie mentioned, from when that return was filed. So let's say, for example, it was some records for your expenses, and it was from, let's say, 2017. So you'd say, well, 2017, that's more than 3 years ago. But think of that 2017 year. If you're filing a calendar year return for your business, that return is not filed until 2018, let's say. So now you're looking at, in your mind, maybe 4 years or longer. And as Maggie mentioned, if we have if there's found to be fraud in the case, there's no statute on fraud. If there's found to be a substantial understatement of income, there's like a 6-year statute on that. And then also for tax returns, I'm somewhat of a pack rat. I never throw out a tax return. So that's something I would keep your tax return records pretty much indefinitely with that. But thank you.
Okay, thank you.
Bearing in mind, of course, that Odette is an IRS employee, so.
Well, let's hope she doesn't.
That's true. That's very true. And was a former revenue agent, so very true.
I hope you didn't get audited, Odette.
No.
So I have another question for you. A CPA versus EA, what should we know about the differences? Because there was a slide about using a CPA and an EA. So people like to know what the differences are, if any.
Would you like me to take that, ladies?
Yeah, go ahead, and then others can chime in.
So the primary difference is a CPA has to pass the CPA exam, and then they also have to, they are overseen, if you will, by the state CPA society. So it's the state CPA society that stays on top of them in terms of their continuing education and items like that. An enrolled agent is a designation that's overseen by the IRS. An enrolled agent also has to either pass an exam or be a former IRS employee. And if you're a former IRS employee, you only get that designation if the people that you worked for and who know you have a certain confidence level in your abilities. And so the IRS oversees the enrolled agent program, and it's the IRS that handles the continuing education piece. But in both instances, I don't personally think there is one that's better than the other. It's just a different designation that's overseen by one is overseen by the respective state and the other one is overseen by the IRS. So Odette and Leslie, I don't know if you want to, if I'm trying to give like a basic overview. I think there are more details, but from my personal experience, I have seen fantastic enrolled agents who are exceptional, and I've seen fantastic CPAs. I don't see one designation as better or smarter, if you will, than another.
Well, they're both qualified.
I can certainly, they're both qualified, and I can chime in a little too. This is Odette. So in terms of representation rights, there's no difference from an enrolled agent or a CPA or a tax attorney for that matter. They're all governed under Circular 230. And as Maggie mentioned, CPAs have to pass a CPA exam, and then enrolled agents pass an IRS enrolled agent exam, a special enrollment exam. And both of them have continuing education requirements. So I agree with Maggie that both are very well qualified and overseen as well.
Oh, great. Okay, another question. I plan to operate a single member LLC, and I have my EL number for my business. Am I required to file a quarterly Form 941 if my business hasn't started yet?
So I can take that one. This is Odette. So
Yes.
in terms of an EIN, I'm assuming they mean an employer identification number or federal ID number, as Leslie had mentioned. So if it's an entity that is separate, like a partnership or a corporation, those need to have a federal ID number in order to exist. If it's a sole proprietorship, then you don't need a federal ID number unless you have employees. So any business, no matter the business structure, if they have employees, then they need to have a federal ID number. Now, in terms of LLCs or limited liability companies, so that's a state designation, but in terms of its classification for the IRS or for federal purposes, it depends on the number of members. So if it's a single member LLC, it can either for tax purposes be taxed as what we call an entity disregarded as separate from its owner or a sole proprietorship. Or it can be classified as a corporation. So if the LLC decides to be classified as a corporation, then it does need an EIN. And if on the other side, it decides to be classified for federal tax purposes as a sole proprietorship or that entity disregarded as separate from its owner, if it doesn't have employees, then it would not need an EIN. As for an LLC with 2 or more members, then the choices for federal tax classification would be a corporation or a partnership. And partnerships do need federal ID numbers. They do need an EIN. And then even if you're, for example, a sole proprietorship or an LLC that is for federal tax purposes classed as a sole proprietorship, you can choose to have an EIN. And sometimes even, for example, banking purposes, they might require to open a business account that you need a federal ID number. So you can certainly apply for one as a sole proprietorship, even if you didn't need one because you don't have employees. So that was a very long answer to a short question.
Okay, people are interested in the answer. So I'm starting a small business. Do you have to file taxes if you make less than a certain amount for the year? At what point must taxes be filed? Please speak about the protocol for filing also. I would assume if you make money or if you take in money, all of a sudden you have to, is it like the first 1,000 is exempt or there's no such thing?
I can take that. There's really no such thing. If you've started a business and you've started earning income, then you need to report that income. So in terms of the quarterly form 941, again, those are for employees. So the minute you have employees, then your requirement for the employment tax return starts. So you would need to, of course, have an EIN because you have employees, and you'd need to be filing your quarterly 941s, making your deposits. So I hope that answered the question.
I guess they were thinking more as a sole proprietorship kind of a thing, as a small business, selling something online, soap or jewelry or something.
So if you're a sole proprietorship and you have employees, it doesn't matter, because if you have employees, you need to file your quarterly employment tax return, which is the 941 that they're referring to. If you do not have employees and you're a sole proprietorship, so you're not an employee of yourself as a sole proprietorship. So that 941 requirement is only going to start when you begin to have employees.
Right. But at the same time, I think the question also says, if I'm just making income as a sole proprietorship, I have to pay taxes. So I have to file a form. It's not like the first 2,000 is exempt and then after that you have to pay.
No, it doesn't. But in terms of what requirement you would have, let's say you have a calendar year and you started that business, let's say in what you deem to be, let's say informally in June, you don't have any employees, but you started to earn income. So again, if you're a calendar year taxpayer, you're going to report that on your calendar year return, which you file the next year. What you have to be concerned with is if you have a potential estimated tax liability. Because you've earned income, do I need to pay more in? Well, you can do that in different ways. You could do it in quarterly estimated taxes or the EFTPS system that I mentioned, or let's say if you or your spouse that you file a joint return with has another way of getting the payment in. For example, they have a W-2 job where they could increase their withholding to get that payment in. So the bottom line is you're going to report that business income for the year that you've set up that income, but you just have to be worried about, do I need to make any estimated tax payments?
Right. Oh, Okay.
And of course, if you have employees, then you have your payroll, your employer return requirement.
Right. Here's another question. Also, at what point should an individual service website become a business? Is there criteria on when to convert to a business? I would imagine they're selling some sort of a service online, and all of a sudden they start to get quite a few customers. Now it's a business. Is there a crossover point dollar-wise or no? It's kind of a tricky question in a way. I would imagine a business is a business, but
What do you mean a crossover point? A point
Well,
at which they
yeah, all of
they
a
become a
sudden-
business?
yeah, as opposed to just a service website. Like I think a service website could be defined as somebody giving advice about anything, herbal medicine or something like that. And then all of a sudden people start to say, hey, I'd like to buy some of it, or can I hire you for something? That turns into a business from what amounts to an online chat.
I guess when you receive your payment from somebody, when somebody gives you some money for it.
You're a business. Yeah. That's what I
Right.
thought. Yeah. Okay. Yeah, it's kind of funny, but people look at things differently, obviously.
Right.
This, okay. I have a DBA. Are they required the same for taxes as other businesses if I have an ENI number also? I want to switch to an LLC. Can I keep my business name? I have not made any money on my business. Lately, as a self-published author and selling design online, Zazzle, I guess that's where they sell it. How do you do taxes if it is through another business? Will I receive a 1099 if I make money? Kind of complicated here. Yeah.
I can take that one.
Oh, good.
Okay, so so when the person says I have a DBA, what that means is they are a sole proprietorship and they file a Schedule C, and that Schedule C is a schedule or an attachment that gets put on their Form 1040. The person mentions that they have an employer ID number also, which pretty much anybody can get an employer ID number. It doesn't necessarily mean that you have employees, nor does the ownership or the possession of an employer ID number mean that you have to file any certain forms or that you're obligated to be any certain type of business entity type. In this particular case, this person wants to switch to becoming an LLC and keep the same name of the business. So to be perfectly honest with you, it's not uncommon for us at the IRS to see the LLC or the entity name change. But if you want to keep the name of your business the same for your customers, you can just do that. When you want to switch, you may need to get a new employer ID number, and I will send you a link to the website that tells you whether or not you need a new employer ID number. But assuming that you did, you could probably figure out a way to keep the name the same, especially because we have multiple businesses of the same name. There's thousands, if not millions of businesses throughout the country. And I know that there are those with the same name. So if you want to keep the same name with the IRS, that shouldn't be a problem. But again, you may need to get a new employer ID number. And then the last question was, as a self-published author and selling designs online, how do you do taxes if it's through another business? Will I receive a 1099? So if you're doing business with another business, that business, if they pay you more than $600, they are required to issue you a 1099. Now, whether or not they do that is another story. And they are only required to issue the 1099 for what they pay you. They have probably no idea what your expenses are. So if they paid you $10,000 in 2020 and really you ended up losing money because you had expenses in excess of that $10,000, they're still required to give you that 1099 for $10,000. The difference is you're going to have to take that information return and use it to prepare your Form 1040 Schedule C. And that is the place where you show or demonstrate the IRS what your expenses are and ultimately whether or not you showed a profit or a loss. But the bottom line is you would still have to file a tax return. And to be honest with you, even if you don't get the 1099, you are supposed to file the tax return if you have income and are self-employed. So I hope that answered all the questions for T. Rudolph. If not, you can either come off of mute or you could ask another question. And then I don't know if you wanted me to address the last question.
Yeah, well, the last question seemed to be an auxiliary to the prior one. I think you kind of answered it, but you might just want to jump in again.
Okay, yes. So the person was or the entity's been operating as a general partnership since 2016. They have an EIN and they want to convert to an LLC. Is there a straightforward way to do that without having to close the existing business and without having to apply for a new EIN? So in this chat, I will post the link to the IRS website that it's a very specific page where the topic is employer ID numbers, and it specifically provides guidance around when you do and when you do not have to get a new employer ID number.
Oh, okay, great. Thank you for that. So the question that we get sometimes, I'm starting a small business out of my home, and I'm using one of my rooms in my house as my business address, sort of operation point. Can I deduct the cost of operating that room from my taxes? And then at the end, if I sell the house, do I have to then adjust the selling price to reflect all of the tax credits that I got by declaring my home office? I'm sure you run into this all the time.
We do. So there's two ways to deduct a home office, and assuming that the person meets all of the eligibility rules. One way is you pretty much look at the square footage of your house and then you place a value on that space as a percentage of the total square footage of your house. So let's say you have a 2,000 square foot house and you have a 400 square foot room that you're using. So that's 20% of the size of the house. And so if you were claiming actual expenses, in theory, you could deduct 20% of the mortgage, 20% of the taxes you pay on the house, 20% of the utilities, and all of the applicable expenses. I do believe that there is a depreciation piece to that, and that if you did sell the house, you would have to recapture some of that depreciation. That starts to get a little bit complicated. What's slightly simpler is that the IRS now has a standard amount per square foot that you multiply times the number of square feet of the room, and you use that as the deduction. I have to be honest with you though, off the top of my head, I don't recall if that standard per foot deduction requires that the person recapture any depreciation once they sell the house, but we can get that answer for you simply enough, quickly enough.
You run into that all the time. Everybody wants to deduct a home office, but they forget the other part.
That's right.
Yeah, that's why I asked it. I have one last question. We still have a few minutes. I'll read it so the rest of the audience can hear it, but you can see it. I have 2 nonprofits registered in the state. I ended my affiliation with another organization. Wait a second. So I changed the names with the state. What forms do I need to complete for the 501c4 and the 501c3? Also, when you submit pay for the 1023EZ, how long before you can actually operate as a 501c3? I think you understand the question, but I hope. You may have to think about it.
I don't have I mean, I can look it up probably as easily as you all can. I don't know the names of the forms off the top of my head to becoming a 501c4 or 501c3. And I know we're running out of time and I want to be able to answer all the questions.
Right.
What I would suggest is you go on the IRS website, www.irs.gov, and you just use the search box with those terms and you should be able to find something that says apply to become a charitable organization. And I'm sorry, but again, I know we're running out of time, and if you want to hang on to the questions, if you can send us the questions that we didn't answer, we can go ahead and just send links with answers to them, because a lot of this information is on the IRS website.
We can take care of that. Don't worry about the time. I have two more questions. One is kind of interesting. I seeded my company with my own money that I have already paid taxes on. It is my understanding that I don't have to pay taxes on the initial investment only when I exceed that funding. I don't.
Right. So that's kind of what they call, like, it's startup money and it was your own money. So that's not income. That's the money that you're using to fund your business. And so it's not income. It's, I mean, if it was a corporation, they would call it paid in capital. It's money that you're using to start the business. In theory, and again, I don't know what type of business entity you are, Ms. Coleman, but it's almost like you're loaning that money to your business. So no, that would not be income.
Okay. And I have one last one here. This is kind of interesting. I received some sort of penalty and I can't get it resolved since December of 2020. I have called the IRS multiple times. I was told I needed to speak to a supervisor multiple times and no one will call me back. What should she do?
I just put in the chat box my email address, and that person can just call me or email me, I should say. I actually have to go, though. I apologize, because we have another event at 1 o'clock. But if there are outstanding questions, we can get the answers to you. And I'm really, really glad that you all were so engaged, and we are happy to get answers to you. We can even come back another time if you guys want.
All right. Well, we will probably have you back next year in our program. So I realize it's right at 1 o'clock. I want to thank everyone from the Internal Revenue Service, Leslie, Margaret, and Odette early. And you will get a copy of the questions and everything also.
Okay, great. Thank you.
Thank everyone who stayed on and listened. Have a great day.
Thank you.